Alright, a very good day and assalamualaikum to everyone watching this video. So first thing first, we are back with artology.co in activity 3 MGM4321. Precisely, let me advise you. So, in this activity, I'll give a bit briefing and introduction. This is an activity where we are needed to find a recent issue relating to breach of duty by an auditor or company secretary. And we are needed to discuss either the breach and the action done by the breacher is relevant according to Malaysian laws involved in the issue. Next one, I'll present you the advisors of my team, hence me as the introducer. We will have Muhammad Hazim Badrin, Maria Mustafa, Nasrullah Hazim, Nur Shahira, and also Yap Conway to help in advising you regarding this matter. Without wasting any more time, I'll pass the mic to Nur Shahira, as you please.
All right, thank you, Haziq. So, Assalamualaikum warahmatullahi wabarakatuh, and a very good day to Doctor and also all of the classmates. So, our chosen case is for 1MDB and Kpmg. So, for your information, Kpmg is a global network of professional firms providing audit, tax, and advisory services. And also, 1MDB is a One Malaysian Development Berhad project. So, a little bit about the case background is 6th July 2021, Malaysian government, Ministry of Finance, 1MDB, and various subsidiaries filed a 5.6 billion suit against 44 partners of Kpmg Malaysia. So the suit alleged breaches of contract and negligence in the audit and certification of 1MDB's financial statements for financial year 2010, 2011, and 2012. So Kpmg, however, denies the allegations and pledges to vigorously contest the suit. So lawyers from Sharon Delamore and Co., who represented 1MDB and its subsidiaries during the case management before High Court Deputy Registrar Ida Melisliza Ma'aruf, filed the 140 pages suit on behalf of the plaintiff. So the Sharon Delamore and Co. Is established in 1905 and also one of the leading law firms in Malaysia with over 100 lawyers and 230 staff, has the resources to run and manage the most complex projects, transactions, and matters. So in a statement of claim, the plaintiff said that between 2009 and 2014, some 5.64 billion had been misappropriated from 1MDB and its related subsidiaries to the benefits of ex-Prime Minister Datuk Sri Najib Razak and his associates. Of the 5.64 billion, a sum of 3.2 billion was misappropriated during the 3 financial years while Kpmg was the auditor, namely financial year 2010, 2011, and 2012. So the plaintiff claimed that none of the fraudulent transactions and misappropriations carried out under Najib and implemented by the then management was spotted by Kpmg during their tenure as 1MDB's auditor. So the claimants say that contrary to the opinions expressed by Kpmg in its audit reports, the statements for those years did not give a true and fair view of 1MDB's financial affairs. So the plaintiff further claimed that the losses of 5.64 billion that was allegedly siphoned from 1MDB between 2009 and 2014 would have been avoided if Kpmg had obtained sufficient evidence to support its audit findings in expressing a true and fair view audit reports relating to those financial years, and thus would have prevented further transaction that resulted in further misappropriations. So that is all for the case background for our chosen case. Moving on for the next part, I will pass to Mariam to explain what are the law being breached and why the person was charged. So please welcome Mariam.
Okay, thank you, Nur Shahira. So before I explain on what are the law being breached and why the person was charged, 1MDB is a public company, thus the Companies Act 2016 is applied to them, which it includes the duties and responsibilities of an auditor pertaining to the company's financial statements and accounting records. Section 266 of the Companies Act 2016 specify that every auditor of a company shall report two significant regards to the members of the company, which are firstly the financial statement, and secondly the accounting records and other relevant records to those financial statements. Next. So as for this case, 1MDB is a public listed company, and thus it is compulsory for the auditors to present their audit reports in the company's annual general meeting as per the Companies Act 2016. Such report under section 266(2) of the Companies Act 2016 must state the following in the report. Firstly, whether the financial statements are in his opinion properly drawn up and gives a true and fair view of the matters required as per section 248, and such statements were in accordance with the applicable approved accounting standards. And secondly, any defect, irregularity, or unpresented matter in the financial statements without regard to which true and fair view of the matter dealt in the documents would not be obtained. So I will now pass to the next presenter.
All right, thank you, Mariam. I will continue with the next presentation. So firstly, it is also important to understand that auditor also has the duty to report by writing to the registrar when the followings are observed, which are first, there has been a breach or non-observance of any of the provisions of the Companies Act, or where the auditor is in opinion that there is a serious offence involving fraud or dishonesty being committed against the company or the officers of the company, and failure to report the above observation will cause the auditor to be liable for an imprisonment not exceeding 5 years or fine not exceeding 3 million or both. Next. So in this case of Kpmg, Kpmg had breached the duty of care as an auditor for 1MDB due to negligence in detecting fraudulent transaction and misappropriation carried out. And Kpmg also had breached duties of auditors under section 2669 for failure to report existence of frauds and misappropriations made against the company to the ROC. Despite significant red flags presented on the financial statement audited by 1MDB's predecessor auditors, Ernst & Young, where the report were not taken seriously by Kpmg while doing their audit. Right, that's all for me. I will pass to the next presenter. Thank you.
All right, thank you, Nasrul. Then I will continue with the next part of the presentation, which is what are the sanctions given. Sanction is the punishment or the penalty. The Ministry of Finance announced that the Kpmg had to agree to pay $80 million or 340.92 million ringgit Malaysia to the Malaysia government to resolve all the claims related to its audit of 1MDB. Next is what do Kpmg supposed to do to prevent these charges against them. First, Kpmg has to apply standard auditing of codes of ethics for professional accountants as a guidance for auditors that help auditors in audit steps and procedures that should be applied to fulfill the audit objectives. And then Kpmg also should pay close attention to the terms and conditions agreed upon in the engagement letter. They should be clear on the scopes of duties, roles, and obligations as an auditor. And then next, Kpmg should comply with the section of 266 of Companies Act 2016 that states the power and duties of auditors. As auditors are important to verify and detect error and must report if there's any suspicious matter. And next, I'll pass to Hazif to continue the presentation.
Okay, thank you. Now that we have come to the last part of the presentation, we would like to discuss on what can a young auditor learn from the case of 1MDB and Kpmg. Firstly, it is highly understood that auditors are professional bodies who clearly owe professional duties to their clients. But the question is, how far can auditors be liable? Can they blame their clients for providing false information which lead to the auditors giving false opinion on their audit reports? Next slide. Okay, so this question has been clearly addressed in the United Kingdom's House of Lords case of Stone and Rose Limited versus Moore Stephens 2009. This case is quite similar to what happened between 1MDB and Kpmg as it relates to the failure of auditors in detecting the company's fraud. In this case, it is emphasized that auditors still hold the responsibility to detect accounting deficiencies or managerial fraud. This is given for the fact that the auditors clearly have a duty to report the company's fraud or an irregularities to a third party. This is important as it allows the auditor to act even where it is found that all the directors were incomplicit to the fraud. As such, an auditor cannot simply claim that they are discharged of their liabilities even when the director has failed to carry out their own duties. As you can see on the slide, we include a quote by Lord Manser from the case of Stone and Rose, in which he said that it is in principle therefore no answer to an auditor who has failed to discover fraud to point to involvement or knowledge on the part of the company's directing mind. Both senior management and auditors owe duties to the companies intended to protect shareholders' interests, and such duties must be enforceable. However, present scheme of fraud is categorized. It cannot, in the context of the audit engagement, be attributed to the company itself so as to relieve the auditors from their duty or prevent the company complaining of its breach. Next slide. So coming back to our question on what can a young auditor learn from the issue between 1MDB and Kpmg, based on such principle that was stated earlier in the case of Stone and Rose versus Moore Stephens, it can easily be said that even when the auditors have been given false information by the employee of the company that they are auditing, those auditors are still not allowed to simply be dismissed of their liabilities as they are under a duty to the company to test the truthfulness of the company's financial statements. This can be said because if the auditors had reasonably performed their duty, they would have realized such statements were false, as it was their pre-existing duty owed to the company to guard against being misled by such false statements. So to sum it all up, young auditors must know that they are still liable and responsible to identify any irregularities and misstatements in their client's financial report, even if they were given false information. And I will give to Haziq to conclude the presentation. Thank you.
All right. So thank you, Hazim, for the heads up. And after all of my friends, all of my advisors presenting their part in this, I would say I'll give you a fresh recap of it. So we went into case background where Shahira said about Kpmg and 1MDB having a case together. And then we have Mariam, Nasrul, and also Yap explaining what are the law being breached and why the person was charged, what are the sanctions given, what do KPMG supposed to do to prevent discharge against them. And last but not least, we'll be having Hazim explaining to us the importance of this case in a life of a young auditor, because it actually gave them a thing or two that could be learned from this case. And also with the implementation of Stone and Rules Limited versus more defense, as said by Hazim, I guess it was a really good advice. And with no time to waste, I guess that's all. Thank you for coming to our advice session. That's all.